Yo, what's up, everybody? Interesting kickoff to the markets. Okay, we'll talk a lot more about what this whole DeepSeek thing means for the broader market and how the market's responding to things, but it's something to be aware of. However, I have some very specific opinions on it that we'll talk about. And who do we have in the chat? Looks like we got But Donkey Kong says volume. Unfortunately, we don't play volume with the videos here because if I do that during a stream, a lot of times they turn the stream off. So that is why I turn on closed captions so that you can read along, but there is no volume for that. Zachariah says, Irma Gerd, discounts all day. One could view it that way. There's a danger in viewing it that way because we could say companies that are doing really poorly are at a deep discount, but from a trader's lens, we need them to move the way that we would like them to move, which for a lot of people are bullish traders. So stuff being on discount isn't actually a great thing for traders unless they're building long-term investing positions, which we're actually going to talk a little bit about. Because before we get too far into the stream for today, I want to make it abundantly clear. I think there's huge opportunity right now. I really do. And there is a bunch of repositioning that I did today. We'll go through most of that during the pro stream tomorrow to talk about some portfolio changes. One of them is updating the levered coverage strangle. I recently rotated out of UPRO, kind of using the movement from today. It put a bunch of the options actually in near-term profit, even though the short calls were previously in the money. I was waiting for those to run their course. So some changes there. And then I think from an individual stock perspective, there are a lot of things now that offer pretty significant opportunity based on the sell-off. So we will talk about all of that. Now, one of the funny things that we talked about yesterday during the market prep stream is one of the benefits of futures. And one of the benefits of futures is that they trade during non-market hours. And yesterday, we actually spoke explicitly about something like this, where if we zoom this in to a 5-day, 15-minute, you can see where futures opened up. And then during the stream, when we connected, we started talking, 1700 Pacific time. And then once we wrapped that stream up, it was around an hour long, I think, around 1800, somewhere in here, I actually entered a short position. And the reason why I entered a short position is not because the futures were down the night before. That's not it at all. There's actually a very mixed relationship between futures open in the evenings and then where the market ultimately opens the next day. The reason why I put on a future short is because I had a bunch of long deltas. We were actually just talking about this yesterday, and it was a low risk, not so much a hedge, although it does function as a hedge. It was way more to play a potential downside move. That was the entire intention behind the original outlay of the position. But if you take a look at the way that futures behaved from market open yesterday at 1500 Pacific time and to today on the open and then into end of day, there's a few things that should really stick out to you. One of the things that should stick out to you is that the news accelerated as overnight markets were opening up, obviously overseas markets and stuff like that. And then when it started coming into on the day, it actually started rallying. And that's a really important note. So as people are starting to kind of feel uncomfortable or nervous about what's happening right now, I don't really think there's a massive reason to be super nervous here. I really don't. I think that the market is still holding these general key levels, and we'll talk a little bit about that. Now, we'll talk about the market as a whole. Then after we get through the market as a whole, I want to talk about how we can look for specific opportunities that are relevant to right now. And it's because there are quite a few of them. So obviously this is the talk of the town. This is what everybody's interested in, is this whole, dump from DeepSeek. Here's a few things. The first thing, this is not news to the market. This is not new news. And what I mean by that is most institutions, I already can tell, they know this because this isn't brand new information that's come out. That's an important note here. This isn't like some brand new data point that nobody's ever heard of. Kind of like a great example is when we had COVID-19. That's a great example of where really nobody knew what the hell was going on. Then this thing dumped out and, everybody was getting caught up with what was going on. That's like a brand new piece of information that a lot of people are starting to figure out at the same time together. This is not that. This has been in development for some time now. And most market participants, specifically that track the AI space, are full well aware of this. Now, that begs the question, what the fuck happened? Why would there be such a visceral reaction from the market against something that we generally knew? Well, it's because there was some new details around the technology that has come out and is starting to cause slight intermediate / near-term repricing of US securities that are in the same space, which is interesting. It's interesting for a lot of reasons. One of those reasons is because if we take a look at the movement that you saw in AI dominant stocks like NVIDIA, this would lead you to believe that there's some sort of massive issue with NVIDIA, with it dropping nearly 20% in a day. It closed down what? 17% down. Huge down day in NVIDIA. So why does that matter? Well, it matters because what you're seeing is a short term, so far, can always change, but you're seeing a short-term visceral reaction to this new news and potentially some sort of change in demand related to NVIDIA's equipment. Because even if something like DeepSeek can be really efficient and doesn't need as much hardware, is cheaper to train, NVIDIA is still more likely than not going to be involved, which we're going to take a deep look at. Well, I guess I shouldn't have said deep look at DeepSeek. That's a little annoying. But we are going to take a pretty close look at DeepSeek. I want to understand the supplier relationships. We're going to get pretty far into detail on DeepSeek today, just because it's a really interesting opportunity. It's an opportunity to explore because you now get a chance to see how the market is still so reactive. And this is important. The market being so reactive is still unbelievably fantastic from a volatility trading perspective. Fun fact, one of the reasons why I rotated specifically from UPRO into SSO is because I ran an analysis on IV adjusted return on risk using the variance in implied volatility for the stock, the risk of the trades, and then the returns that I was seeing in the underlying. And funny enough, with volatility so high, it's actually slightly more optimal to be an SSO versus UPRO as it sits today. Now, there's a little bit of a liquidity concern and stuff like that, but that's another story based on how we manage the position itself. So let's take a look at DeepSeek as a company. So I'm actually going to pull up like DeepSeek stock overview, and we're going to go through a bunch of things related to this. I don't want, most of these are tied, funny enough, to NVIDIA. Everybody's worried about NVIDIA because NVIDIA obviously is at like the absolute front of this. Overall trillion decline on the market though. Huge decline on the day, which is actually kind of crazy. And then let's grab a couple more things. No. This one we'll look at. This one we'll look at. Let's dig in. So this is from JP Morgan. I haven't read these yet. I just grabbed them right now. This says DeepSeek's latest AI model prompts market frenzy, but investors should remember to stay the course. This obviously, okay, quick admin note. Think of the lens that we're talking about right now. We're talking about this from the lens of JP Morgan, which is a huge company that has a lot of clients. So right now they're trying to say to their clients, I'm the fuck down, gonna be all right. That's what they're doing right now. So really important to know that, because I want to see what else they come up with, but let's go through here. All right, so today markets have been adjusting to a new threat AI model challenging many assumptions about technology dominance. Here's the thing. As we go through this, one important note, and this is not to get into like US versus China and all that stuff. I don't really care for that dialogue on this stream. But China isn't fully known for being the most forthcoming country that exists. They're not the most forthcoming about everything. So that being said, as there are a lot of these different claims related to the cost of training the model, the model's utilization of various chips and stuff, we kind of have to take some of that with a fucking giant grain of salt. Now, the reason why that's being highlighted here is because whenever we look through different news sources, you have to identify the perspective and paradigm of whatever it is that we're looking at. So as DeepSeek, part of China, China has a completely different media structure, different business structure. China is not known to be business friendly, that kind of stuff. There's going to be a lot of skew with what is being shared. It's the same thing. Again, most of you know that I'm military, right? So when we're watching from a military perspective and you see China talking about coming up on a 6th-gen fighter, and then you look at it, you're like, bitch, that's not really a 6th-gen fighter. But, you know, that's what they're calling it. That's what they're branding it. So I'm not saying that this isn't the case. This actually looks like there's a pretty significant amount of validity behind what they're saying. But we have to take some of this with a massive grain of salt in terms of training costs, training models, which is a really big focus for AI tools because training is super time intensive and expensive. So now as we pivot to reading an article from JP Morgan, this is a wealth management. It's literally telling you right up front what they are. They have clients' money, and right now they've been telling all their clients for the last year, bet the house on NVIDIA. It's going to skyrocket it because that's literally at the core of AI. And then today it's down 17%. So JP Morgan today is getting hit up by tons of their clients being like, yo, bitch, what the fuck? Where's my money at? Because this is not what I thought we were doing here. So the perspective of all of this stuff is really important to keep in mind. Okay. So let's continue. DeepSeek, a 2-year-old Chinese startup, launched its latest model early last week. That's when the model launched, early last week. Early last week. Why am I belaboring that point? Because early last week, the market didn't give a fuck. Okay. The model is an open reasoning large language model, LLM. So it's very, very similar to what we see from primary market offerings from domestic side from the US today. And it was developed using adaptations from Meta's open source Llama. Critically, DeepSeek's latest model matches the performance of OpenAI's cutting edge models across math, coding, and reasoning tasks at a reported approximately 95% discount to operate and train. Well, hot damn. That seems pretty sick, doesn't it? Pretty big deal. So let's continue. Oh, that's actually funny. I literally didn't even read this. What's the big deal? The market is worried that their cost efficiency threatens the assumed dominance and valuation premium that leading US semiconductor and infrastructure companies have enjoyed. Indeed, some of the stocks that are taking the biggest hit so far, these different companies, some of the hyperscalers who were driving AI capital expenditures are down on the day, but outperforming the stocks that are more levered to AI infrastructure. So here's the next question. How is it that the large language model itself is causing semiconductor and infrastructure companies to contract? The large language model itself still requires semiconductors and infrastructure in order to do the thing as an LLM. Another really important relationship to pay attention to as we continue working through this. Concentration of the US large cap stock market and mega cap names is a risk facing investors in 2025. This is talking about the centralization of mega cap as a percentage of the overall stock market, which is a massive number. I don't know what it is today. I'll find out for you right now out of curiosity. What percentage, I'm asking ChatGPT, what percentage of the US stock market cap is accounted for by Mag 7 companies? I actually don't know the answer to this right now. Let's see what GPT comes up with. They account for 35% of the S&P 500 market capitalization. And then for those that don't know, the S&P 500 represents about 80% of the total stock market capitalization. So those 7 companies represent just shy of 30%, like 28% or 27. I don't fucking know. High 20%. So this is an important element to outline without a doubt. And this is something that is going to be brand new, especially for people that are used to approaching this whole thing from an investor standpoint. From an investor standpoint, you're taught buy an index ETF, it's diversified. But now when you buy an index ETF, you're kind of getting 35% of the same shit. That's not super diversified based on the original principles. That's actually why you see a rise in the utilization of like equal weighted S&P 500 indices and stuff like that, because some people are starting to get a little nervous about the hyper concentration. So just another note to keep in mind. Okay, let us continue. Next, AI opportunity is not a monolith. That's funny. So my brain thought monolith, which for those that don't know, that's actually a squat tool that is really expensive, but it's super cool. It's a way to be completely free out of the rack, so that you don't have to do a step out. So you unrack the bar. There's levers that your friend, if you have a friend, will pull, move the holds out of the way. Anyways, that's a monolift, which is different than monolith. Jevons paradox states that increased efficiency can lead to increased consumption of a resource. Lower costs for AI models could lead to faster, this is exactly what I was thinking, could lead to faster adoption by corporations and households. Further, the drop in the headline stock index masks some encouraging performance underneath the surface. The average stock is down only 15 basis points. It's literally funny. And I have to be honest, I also didn't know that it was called Jevons paradox, but this is exactly what one of the points I wanted to share with you, at least from my own perspective, which apparently now is known as Jevons paradox, where increased efficiency typically leads to increased consumption because you can apply it in more places net. So the overall 95% growth in efficiency, first of all, is great, because that means other AI tools are also going to search to be as efficient as humanly possible. And my my expectation is that I don't think anything in China is going to be so incredibly disparate from what's available here in the US. So then that means they're going to be jockeying back and forth who's in the lead, who's slightly behind. But all of that, as the overall field of AI grows in terms of adoption scope, that's going to benefit all of these different AI companies. They're all going to become smarter, more efficient, better deployed. And then it's going to impact other areas of the economy, which is a big factor for this entire move that you see today and the expectation. So again, to reiterate, right now, to me, it looks like short-term sentiment got caught off sides. After hours, E-minis are up just a little bit. The Russell can't catch a fucking break to save its life. It's down almost 0.2%. And the NASDAQ is up 0.21%. VIX down 0.06%. Bitcoin up a quarter point. Gold up near half a point. Crude up 0.15%. Bonds down a quarter. ETH up half. And then corn is still on a fucking tear. Corn has been crushing it. So wheat is up a little bit. Soybeans up not too much. Okay, so right now it looks pretty mellow. So further the drop, we already read all that. Okay, here we go. There are still many unanswered questions to the validity of the model, the true cost to train it, and its implication for US tech firms. Huge. This is exactly what we started discussing from the very, very beginning. That, again, as super friendly as we are with China, and as well known they are for being completely forthright, upfront, and fair in what they're sharing, everybody's like, I don't fucking know about that. 95% is huge. Now, I can tell you what the market will be thinking is, even if it's a third of that in true cost savings, that's still huge. It's still huge. So the impact will still be there. So the bottom line, according to JP Morgan, we expect the AI trend to continue to drive economic and market outcomes. However, continued competition and innovation will create winners and losers on the surface of equity indices. I want to reiterate this point. If you think that continued competition is, just going to show us the same names, you're completely wrong. You are completely wrong. There is a significant chance that the true leaders of AI are names that you don't even know yet. We've seen this with innovation every time we go through big technological innovations. You will notice that exact thing, that some of the big names that are going to lead this going forward and become just huge companies, you don't even know the names yet. You have to look for them. And there's some of them that we'll talk about. We encourage investors to look for opportunity while maintaining overall portfolio resilient to shocks and da-da-da. Yeah, great. Okay, I actually like this. And in case you guys need to connect with a wealth advisor from JP Morgan, you can hit them up here. They can, hook you up with putting you in NVIDIA and then making sure that you stay in it when it drops 16 points in a day. Okay, over to IBD. DeepSeek developed its AI system without cutting edge foreign processors, which China restricted from obtaining due to US export curbs. This is important because I still believe that our processors are superior to theirs. So even if they found a way to be more efficient with what they have, that means that what's potential for us is huge. Think of it as the 5-minute mile. I think for everybody, for the longest time, everybody thought that the 5-minute mile just couldn't be broken. And then some dude, I don't know who it was, ended up breaking the 5-minute mile eventually. And then as soon as he broke it, motherfuckers started breaking the 5-minute mile, not regularly, but way more than before. So there becomes a mental barrier that becomes broken once we see that something is possible and doable. Think of it even from the perspective of being a full-time trader. Most people know that the prospects of being a full-time trader for the vast majority of people are not good. You're very much better off with buy and hold in an index ETF. However, you can clearly see that some people can figure it out. Some people can make it. So then that lets you know that the shit is doable. It's the same thing here. So if we see something like DeepSeek being way more efficient using less optimal processors, what does that tell you? What's a potential for better technology? Ipso facto. So the Chinese firm says it built its systems for less than 6 million. Sure. Versus the billion spent by rivals. It's also much cheaper to operate than OpenAI and Meta. So the news comes after U.S. venture Stargate announced plans to spend as much $500 billion on AI infrastructure. Silicon Valley venture capitalist Mark Andreessen described DeepSeek R1 as AI's Sputnik moment, which I actually agree with that. I think that that's really, really, I think it's a great analogy. When the Soviet Union launched the first artificial satellite in 1957, kicking off the space race. A Wired article said DeepSeek focused on maximizing software-driven resource optimization since it didn't have access to the latest AI processors and others. So the other thing that this starts to beg the question is, since DeepSeek was so focused on maximizing software-driven resource optimization because they didn't have better resources, what does that then mean when we think about the priorities for domestic companies that do in fact have access to better software? Probably solving more complex problems and elements than this, because they're obviously needing to optimize for a specific input. They came up with more efficient methods to train its models, such as using custom communication schemes between chips, reducing the size of fields to save memory, an innovative use of the mix of models approach, according to Wired article. The other reality here is, if you think about it from a legal perspective, even what things have access to train off of is going to be completely different, because again, China is more dictatorial. So they can essentially just say, yeah, the AI models can train off whatever the fuck they want. And in the US, there's a ton of legal battles going on right now about what the models can or can't use, because we actually, I know, shocker, somewhat value the individual autonomy over their own information. So that's not directly tied to size of fields, different communication schemes, but that is another element to bake into this. Now, again, the cool part about it is, regardless of what route they go, there's still a lot of opportunity here for pretty much everybody involved. Okay. DeepSeek news could lead to a pause in AI infrastructure spending by hyperscale cloud service providers as they rethink their capital expenditure plans. Evercore ISI analyst Amit, that's a fucking name, Daryanani said in a client note Monday, "We think some of the risks near term will be around, do we need to spend as much CapEx given a cheaper alternative? It's likely that over time this will end up being the scenario where cloud enterprises can do even more AI-centric work beyond text, images, and video." Yeah, completely agree with that. Here we go. This couldn't agree with anymore. DeepSeek panic seems overblown, and this will lead into what opportunities are probably here for us. Bernstein analyst Stacy Raskin, that's a fun ass name, said DeepSeek news does not spell doomsday for AI buildouts. The resulting Twitterverse panic and its Xverse, get your shit right, Raskin, panic over the weekend seems overblown, which I agree. According to the many occasionally hysterical hot takes we saw, the implications range anywhere from "that's really interesting" to "this is the death knell." I don't know what this is. What's death knell of the AI infrastructure complex as we know it? I need to learn what this is. What is this? The tolling of a bell to mark someone's death. Ah, shit. Fun fact. There's something I learned today. This is sick. I didn't know how many people knew this. That's a cool ass. I like that. I like that bell too. Could DeepSeek be China PSYOP? Could it? Certainly could. DeepSeek impact on the AI technology supply chain all depends on the veracity of DeepSeek's claims. Now, the funny thing is the market is obviously treating the claims with significant respect. Big respect. So it seems like they do believe that there is at least some degree of merit. My hypothesis would be that most people that are analyzing this information coming out of DeepSeek, they're just, again, saying, well, rather than it cutting 95% of cost, it might cut 30% of cost or whatever. And essentially just guessing off of that. Let's get into this last one really quick, and then we'll pivot over to start looking at some opportunities. Anything stick out here? Stocks outside AI related industries held up much better, which, funny enough, the financial sector is still looking pretty good. We already know the source of all this stuff. Okay, so you guys already know all these details, which is good. Okay, nothing new jumping out at me here. Let's take a look at the market now. So, couple things. We did in the NASDAQ roll over to net lows. And in the New York Stock Exchange also rolled over to net lows. This is representative of a broader change in breadth as compared to what we've been seeing previously. Important note. We can see volatility popped and volatility contracted. I had a short trade in volatility once it broke above 20.5. So it actually got a little more painful while I was in it, not much. And I took down most of it at the end of the day today. And we'll probably look to take the rest of that down tomorrow. This, again, is just a very standard trade that I continue to run in volatility based on the current paradigm. Zachariah says, market isn't efficient no matter how much they tell themselves. It is. The market is efficient. It's just not perfectly efficient. G36 says it's not efficient at all indeed. It definitely is. The market is efficient. The thing is our expectation when we hear the word efficient is probably skewed by not understanding the totality of what a market is actually doing. But that's my guess why some people might think that it's not efficient, but it definitely is efficient without a doubt. Okay, let's get back to the market overview. Bonds up slightly, Bitcoin trending sideways, still hovering around this 100 handle. Materials leveling off, comm services, big up day. Comm services, big up day. Take a look at tech, big down day. Big up day, big down day. Energy rolling over, still some really good shorts. We actually talked about one of them yesterday during the market prep stream that I put on today because it looked like this. It looked like it was rolling over. The fact that energy is continuing to roll over, even given the big move that you saw in tech today, is also a really important note, because what this is telling you is that people are not running for the hills and rotating out of tech into more defense sectors like energy or like utilities. That's an important note. G36 says, for the efficient market hypothesis, asset prices need to reflect all information. That's incorrect. So this is a common misconception with efficient market hypothesis. There are three forms of efficient market hypothesis. What you're referring to is the strong form, which even the authors of the efficient market hypothesis do not espouse that that's reflective of current markets. G36 says that's the definition. It's not. That's not the definition. You're talking about one of the forms of efficient market hypothesis. There are three forms. So the idea that all information is unanimously onboarded, that's part of what's called the strong form. And again, even the authors of EMH do not promote strong form is reflective of current markets. They understand that there's latency. So yeah, that's why, yeah, there's a scale. There's, yeah, 3 forms to be aware of. The market is kind of more like semi-strong. It's not fully strong. It's not weak. It's like semi-strong. Yeah. So let's continue on. Financials, baller day. Another trade that I put on today from the stream yesterday went on because we were looking at financials and financials were looking good. So they continue to run pretty effectively here. Industrials gap down on the day. Staples. Who saw this coming? Staples. We have to take a look at Staples and see what's going on in there because they finally caught a bid. And interestingly enough, discretionary's up at the same time. Curious. Utilities we already talked about down. Real estate slowly trending up. And then healthcare is also on a pretty big run. Healthcare is actually starting to challenge these term highs, which would actually indicate on a short-term time frame turning around within that sector. So actually very interesting movement between here and here. Staples is most interesting to me just because Staples is it hasn't been able to catch a bid for so long that now I'm kind of like, well, it caught a bid. So super interesting. Let's take a look at the market overall. Yeah, see, even with the big move today, you can see that it definitely hit tech a little bit more. Now, for those that don't know, this is looking at the exchange. This isn't like the NASDAQ ETF. This is looking at the NASDAQ exchange, and this is looking at the New York Stock Exchange. But even on the NASDAQ exchange, there's a lot of tech companies. It tends to skew a bit more tech. So that's why you see this declining more so than you see on this side, in case you didn't know. So if we take a look on a 5-day time frame, there's a big dip in companies that are making new lows, which is interesting. I'll start with saying interesting. The reason why that's interesting to me is the market is in a very delicate stage right now, in my opinion, based on what I've seen, based on my overall analysis of stuff. And this is a little weaker than I would have expected to see. And then you can see on the number of companies that are above 5-day moving average, that dropped like 11 points as compared to the 20-day. And then as compared to yesterday, well, I guess Friday, technically, it would have dropped like 4 points. Okay. So let's take a look now at the sectors. We already know what we're going to find in here. Staples out here crushing it. Household products and beverages. Why? Why is this? Why is that up? Let's see. I just want to see what the deal is. Colgate, Pepsi. Why? PG. So PG looks super strong on a relative basis. Let's take a look at PG. Good earnings. Small eke out on a beat. Did well on the dividend. I'm surprised. I still don't like this to the upside personally, but it looks better to the upside than most other things I imagine we would see in here. What else looks interesting? CHD. If only this says Church of Dwight, that would be better. This is Arm & Hammer, but I really like Church of Dwight. I'm going to pretend that that's what it says instead. That's better for what I want it to be. And gap up today. Why did this have a gap up today? And then we'll get into the AI stuff. I'm just curious. Don't know why this gapped up today. I don't see any news on it. We'll have to figure that out. All right. Let's get over now to really the bell of the ball, which is trying to find some opportunity within the AI stocks. And I want to take a look. AI stock opportunity. I'm just updating our timestamps. And let's take a look specifically. I think NVIDIA is going to be probably one of the bigger ones. So NVIDIA fell directly down essentially to its 200-day moving average. And if we zoom out, go back a little further out in time, I mean, it's clearly down through this area of prior support, now likely turned resistance. Although I think that the reaction that you'll see here for NVIDIA through resistance will be very, very different than other companies that are essentially trying to find their name and trying to find their value. My overarching expectation here is that I think NVIDIA looks so good here. I think that even for a moderate duration trade, this looks so good here. And I already have exposure to it through TQQQs. I actually expanded my TQQQs position today, not a ton, but slightly. And there's a bunch of different reasons for that. One, from the volatility perspective, but two, because one of the larger proponents of TQQQs is this. And I think NVIDIA looks really good here. Now, it doesn't look good, in my opinion, to buy yet. The reason why it doesn't look good to buy yet is because whenever we have companies that have these big kind of gaps down, we have to wait until the dust settles just a little bit before we start running out and seeing if we can prospect on a position. Because single down days like this, big gap down, it is a fucking crapshoot what this can look like tomorrow. It is a crapshoot. We really, really don't know. My expectation would be, given the way that futures are moving right now, my expectation is that it might be bid up a little bit if futures don't roll over. Whereas my normal temperament towards moves like this is expectation of a continuation. But we're in such a weird market right now. So the way that I look at it is, from a long-term investor's standpoint, this is a dream. This is a really, really great area to start prospecting in. From a trader's perspective, in my opinion, you have to wait. You have to exercise a tactical pause here. And I would want to see how it trends above first the 125 handle at least, and then how it does as it approaches the 130 handle. And then if it looks like it's doing well and they're gaining support, we're seeing volume expanding, and we're seeing the internals looking strong, then yeah, no problem playing this as a reversal to the upside. This is essentially a mega cap version of a parabolic long, which is kind of crazy to think about because that's not how that's supposed to work with mega cap companies. But this it is what it is. Big news today, and big news absolutely moved the stock. So let's take a look at the options. Still has huge call skew. And let's take a look at the volume for today. All of it, super short-term volume. 5.8 million calls against 4.3 million puts. And this is a ton of people selling calls, which is exactly what I would do if I was holding NVIDIA. Now, if you caught it earlier in the day, that's a great move to capture. So that doesn't surprise me in the least. But there's still a ton of people that are buying calls today. 34% of the transactions were people buying calls. So the market is not overly scared right now, at least from NVIDIA's perspective. The other thing to keep in mind with NVIDIA is that it had a truly parabolic ascent. And again, for really big companies, this is somewhat unnatural. So if you go back to 2023, take a look. 2023 on a split adjusted basis is trading at 1376. I mean, that's an insane move for a company of this size. So when you see companies move this big, this heavy, a lot of times you will find that they're going to take a step back at some point and they need to consolidate a little bit. So this, I think, just happened to be exacerbated by the news that came out. But this in no way, in my opinion, changes the total fundamental value of the company. I think that it does potentially impact short-term sentiment, which is broadly what we're seeing. So yeah, overall, NVIDIA, I think it looks pretty strong. And I think NVIDIA as a general opportunity for investors, this looks great. For traders, it still looks great. It's just a matter of exercising a little more patience, taking a tactical pause, seeing how it actually pans out over the next couple days. But my expectation is that whenever it does decide to catch a bid, it will probably move up pretty quickly because lots and lots of people want to be in NVIDIA. Because again, regardless of what's happening on this short-term window, people look at NVIDIA as the center of the party for AI, and it's positioned itself to be so. So yeah, I think they're still positioned really, really well. So let's take a look at a few other things that had pretty big moves today. I'm just scrolling through. We'll take a look at it first, actually, just from like a tech perspective. There it goes. And let's see what had the biggest drops. Broadcom down huge, 17%. Oracle down 13%. Let's take a look at these. So the general kind of ideas that we're looking at right now are really wrapped around reversals. And the nature of playing reversals is super, super delicate. And the reason why it's so delicate is because we never know if there's going to be continuation. And you have to be careful if there's continuation. So when we're trying to play reversals, at least the way that I play reversals, is it's typically really, really defensive. And I don't want to step in front of the momentum, but I want to be prepared to monitor a change in momentum and then eventually the broader expectation, which is a reversal. So let's take a look at some of these other AI prominent stocks. So first we could take a look at just Broadcom out of curiosity. So Broadcom's different. Broadcom is different. To me, I actually favor this a bit more to the downside. Man, look at this. There's just fucking nothing here. Very interesting. Take a look at the volume. Yeah, see? And you can see, you can take a look at the options markets fucking tell you. Take a look at this. The majority of puts were bought. The majority of calls were sold. And there's a very small minority of calls that were actually bought. This tells you right away what the market is thinking for something like Broadcom. It is not stoked. I gotta pop the door for Thor. It's time for his dinner. Very, very interesting. What else did we have? We already looked at NVIDIA. Let me know if there's individual names that you all want to take a look at. And we have maybe like 10, 15 minutes left. So if there's any questions that you want to hit, now's the perfect time. I actually want to make a quick announcement for the leaderboard in the Discord. So for those that don't know, we have a completely free Discord to join. And one of the things I'm doing to support people, but then also to help people interact and help one another, share information, I am doing a monthly giveaway, and it'll go to one of the top 10. It'll be random if you're in the top 10. I mean, maybe I should be eligible, but the two things you can win is just like a $10 Amazon or Starbucks gift card. The idea is just to let somebody go grab a cup of coffee on me saying thank you for participating. Or you get a 20-minute one-on-one conversation with me if you feel like, you know, wanting to fucking, I don't know, wanting to put yourself through some pain. That's also a choice. So I might be sitting here talking to myself. But the top that we have so far is Urzul. I never know how to say that. Urzul, Joe, Sky Omen, and Reeks. Those are our top ones. So congrats to you guys so far. We'll essentially a pick on the last day of the month. So shout out to you guys running at the front of the pack. Okay. The other thing that I want to take a look at now, though, is the Pro Workbook. And then I just want to see if there's any questions from the Pro members fast. So Amadeus is asking, could you run through the pros and cons of a poor man's covered call? Specifically, I was thinking one for Qs or TQs, which I suppose then begs the question of comparing covered strangle to a poor man's covered call. I see. This is a completely great question. So it really comes down to leverage. That's the Cliff Notes version. So the way to think through this and to decipher if you want to trade the poor man's covered call, or if you want to trade a covered strangle, comes down to leverage and holding duration. Because the other reality of this is, let's say that you want to have a slightly longer or shorter holding duration. That's actually a pretty big impact in terms of when we think we might want to base the position or put the position on. So yeah, completely great question, but that's the Cliff Notes version. I realize I need to add a link to the stream for these people so that they can easily find it. We don't want that. We want that. So yeah, that's the answer. It comes down to holding duration. If I'm holding something for a longer period of time, then I can either go really far out with the base of the ratio call diagonal, but the main element is, do you want the leverage or not? That's the big difference. Now, the other thing with the poor man's covered call, for those that don't know, that's long. Typically, people will do it at the money, which is different than what I do. The other recommendation I would have here is actually to explore a ratio call diagonal, which is my variant essentially of that strategy. And I think it's just way better, literally way better. So I will grab a link to this as well so that you have this for your reference. RCD video. That's the ratio diagonal. And then this is the other RCD video. Cool. All right, cool. So we're caught up on the pro Qs. Now, happy to dive into really anything else that you all want to take a look at or you all want to talk about. James says eBay for breakout. Let's take a look. No. Definitely not. The reason why definitely not is a few reasons. Prior earnings had a good earnings release, but then a really big gap down. So I don't like that. I also don't like this massive gap up and then a run down. That doesn't mean that this still can't be traded to the upside. It certainly can, but this would not be bucketed as a breakout strategy for me personally. So yeah, that's my point of two. And then I got to let Falco answer this question. What else we got? G36 says, if you want to go long options, then you may want IV to drop unless you expect IV to expand further. ¿16? I'm confused. I don't know what that's in response to. Oh, here we go. Amir says, hi, Eric. What do you mean by waiting for the dust to settle before trading? Is there a way to measure that in terms of waiting for the IV to drop? Yeah, so what I'm referring to, Amir, that's a great question, is I'm referring specifically, I think we were talking what about NVIDIA? Is that correct? I realized that I missed that question from up above. Amir, let me know if that's the correct reference that we were talking about NVIDIA. Yeah, okay, cool, thank you. Yeah, so what I'm talking about waiting for the dust to settle, I'm talking about the price action. I'm talking about waiting to see if price starts to show continuation or if price starts to show reversal or consolidation. So waiting for the dust to settle, taking a tactical pause, it's the same thing. It's just waiting and it's watching. Because one of the worst things people can do from a trader's perspective is start jumping in now. If you start jumping in now, you could time it perfectly, and that would be great. You could completely mistime it and tie a bunch of money up and then have to just deal with your money being in a trade that's not working well, get stopped out too fast. And there's generally little reward for trying to take the entry that fast. So what I mean by that is, generally speaking, not always, you will give up some edge here in terms of perfect pricing, but you're balancing perfect pricing with probabilities. So what this means is the probability of you picking the exact turnaround point in the middle of a move is not really great. That essentially comes down to how well could you possibly gauge and understand market sentiment, which I think, to elucidate that point further, how many of us expected NVIDIA, the company, to be down 17% today? I didn't. I expected it to be down for sure. That's why I was trading short E-minis. But I didn't expect 17%. That's a big fucking move. So the point I'm showing you is that even though even somebody like me that's pretty experienced at this stuff, I had a hunch, I had an idea, the direction was moderately correct, but the severity would have been way off. I definitely wouldn't have even expected 10%. So the severity of my assumption was way off. So the point there is, it's really difficult to tell when the turnaround is actually there, if there's a turnaround. So rather than trying to what we would refer to as bottom ticket, meaning getting the best, lowest price before it starts to reverse, we can just wait and we can see how it behaves. And a great reference is something like this here, right? Just use this as a model red down day. So it had a gap down, had a big red down day. And then the next day, gap down again, rallied up, rallied back down, and it trended sideways for like 5 days. Now, again, if you're an investor, who gives a shit? If you're an investor, this is great. From an investor's perspective, this move is fantastic. But that's a really long-term time frame, and the entire nature of an investor is we're sacrificing short-term performance and overall performance for ease, simplicity, and less interaction with the market. That's the nature of investing. So if it's a long-term position from an investor's perspective, they might not care if it goes from 118 down to 90, because if they're going to look at it in 8-10 years, it'll probably be higher in 8-10 years. It could have a period where it looks really ugly in the mean term. So from an investor's lens, very different from a trader's lens, because from a trader's lens, if I want to trade this to the long side, why the fuck would I get in now as it's going down? I need to wait and see. if it's going to consolidate, if it's going to start rallying, because it could continue to keep going down. Now, what do I sacrifice by doing that? Well, I'm not going to bottom ticket. I'm not going to get the exact lowest point before it starts to rally. I'm naturally going to give that up. I'm purposefully giving that up so that I have a higher probability of being correct when it finally does. So going back to this example, stock dropped, gap down the next day, inside day, another day, kind of sideways, dropped. Then it started consolidating again. And then you have a little bit of an up day. Then you have another pretty big confirmatory up day. As these three up days are occurring, you can see that the volume is slightly expanding, but it's buy side volume. So this is the entire nature of trading, is to keep an eyeball on what it's doing, analyze it, and then make a trading decision based on just the overall performance of it. So here, what I can tell you is volume contracting, sell side volume expanding. Then today, massive sell side volume expansion. So far, this doesn't look good. Now, just because it landed on this volume node, that starts to look okay. I don't love that it closed below the 200-day MA, but the MAs, there's no specific magic that happens here. And then if we zoom this out to understand broader points of control, most people are making a ton of money on this thing. So they don't give a shit. They're not worried about it dropping from 140 down to 118. Most people over the last year got in at 90. So they're plenty happy. The only people that would be moderately unhappy right now are the people over the last 3 months that have been transacting at 137 and now it's at 116. But even those people aren't that upset. So the entire concept of waiting for the dust to settle or taking a tactical pause is from a trader's lens. And that's when we wait and see, what does it do here? Does it continue? Does it consolidate? Does it start to go up? And then we make a trade decision based off of that. But trying to make a directional trade decision off of one big counter move day is really difficult and it's super low probability. So that's the general idea. Really, really great question. I'm glad you asked that one. All right, cool. We have time for maybe a couple more. I know that there was a bunch that was going on today. I'm not in a big rush, but yeah, so happy to look at a couple more. Let's see. Travel. How the fuck do I say your name, by the way? Travel Urzel? Use Urzel? That's my best guess. Travel Urzel. When it starts going up, how long you wait or what to look at that really recovering? Great question. So to finish that is, that is good. The first one, I forgot the first one. Travel Urzel. That's my best guess. And so the way that we can see if this is recovering is if it starts to consolidate, if we start to see buy side volume stepping in, if we see continuation of elevated volume, but prices appreciating. That is really, really positive marks for something that's starting to catch its legs. So for example, here, this isn't the time to buy from a trader's lens. This isn't the time to buy. 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 This could be a time to buy. And for this one, we wouldn't have gotten stopped out. So this entry could have been fine. Now, let me take a giant step back. Completely armchair quarterbacking. We're looking at a previous move, but I'm talking to you from the perspective of my general methodology, which is waiting for consolidation, which is what this is, and then a price breakout of some sort following the consolidation. Well, we want to see buy side volume coming in. We want to see price setting in a floor and then staying away from the floor, wherever that is. We want to see accumulation occurring, and then we want to see price obviously starting to move up. Now, you can also overlay short-term moving averages here, 5-day, 9-day, 10-day, whatever makes you happy. Typically, something this short would be better with like a 5-day. And then a midterm moving average, a 20-day, something like that. And I also can use something like RSI with a 7-day VWAP moving average to understand what the overall strength of this basing is. So for example, as the stock is trending sideways here, if we take a look at the RSI, we can actually see that RSI is positive sloping. So that's a divergence between the oscillator and the stock price. That's typically a clue. That doesn't mean that price is going to turn around, but it's a clue. So the nature of the game in terms of this timing component is our job as traders is to apply our skill set. And in this case, the skill set is technical analysis to identify what we think is most likely to occur. Now you can apply an even simpler analysis and just use options pricing. And option pricing captures a lot of it. But that's the general overview of how to see something that's basing and then in the process of recovery before entry. Another good question. Why not ask to look at SoFi, and Christian asks first to look at Tesla. So let's take a look at Tesla. Resilient today. It has earnings coming up on the 29th. Let's see how it's positioned for earnings, and then let's grab ORAT to look at prior earnings. 3 milligan's 2.7. So people are pretty bullish in Tesla. Let's do Tesla. So from an earnings lens, it essentially is never within the move. This actually would be great for a long straddle, to be honest. A little bit late, but this is one that I actually would trade a long straddle in pretty happily. And what I'm referring to, for those that don't know, is this. I'm essentially analyzing, this is looking at the last 12 moves, but something like this will also give you the same information key, where we can see the move expectation post earnings release. And then we can see obviously the overall stock price movement. So the vast majority of these post release, we can see that, I mean, the majority of them implied falls short. So yeah, this would be a pretty easy long straddle style position for earnings itself. Let's take a look at how it's positioned for earnings itself, which is just this week. We can get rid of all this other stuff. 316 on the call side against 257 on the puts. So people definitely are favoring the call side. And let's take a look at the vol surface. No surprise, favoring the put side, which is pretty standard. We can see a couple kinks a little further out, but mostly pricing downside, which I don't think in this case actually means downside. I think that's more just standard vol positioning leading into the earnings release. So for earnings, it looks like people are positioned moderately bullish. Vol favors the downside a little bit, pretty standard fare for something like this. I can tell you what the event vol itself is. Give me one sec. I have a calculator for this. So the stock price is 397.15. The event expiry vol is 112.89. The ticker vol itself is 68.63. 68 point. I don't know why I said 63. I'm an idiot. 68.3. And days expiration right now is 4. So this is looking at like a 9.7% expected move in terms of the straddle. That puts it at a 38.5 point move. The event vol itself is like 192%. So the event volatility is huge on this one, which is fully to be expected. Let's take a look at it from a longer term perspective, which looks good. On a longer term perspective, it looks good. I don't like this near term price movement on the short term time frame. Like this doesn't look great. Like I don't love that, and it definitely looks like it's generally, unfortunately, following that, which is rolling over a little bit. Obviously, it broke out to the downside here. So now for this, it looks more so like, how does it behave against that is the next question for me. It's sitting on a small volume node right here. So there are people interested in transacting here. So near-term price expectation for me would be to probably oscillate sideways into earnings. And then if it has a good earnings, I actually expect another round of post-earnings announcement drift. That was a position that I traded actually on the last earnings release here because of how strong of a gap up it had post-earnings. So yeah, that's an overview at least of what Tesla looks like. Big Ace says, I was thinking higher IV would make the premium cost more, and if you wanted for cheaper long options, you could buy more. My mistake. Let me get caught up here. What? Big Ace, what are you referring to here? You lose the bottom tick, but once it settles, the IV should be lower, or going for long encounter against any lost gains. Are you talking still about NVIDIA? And are you talking about the concept of weighting and the impact volatility? I'm just trying to piece together where we're at. Correct. I was replying to Reese and yes, waiting to buy in. I see. And what are you talking about with respect to the volatility here? Are you saying like one of the main reasons to wait to buy is because the volatility would be higher and like waiting for the volatility to contract? Or something else? Because if that's what you're saying, I actually would disagree with that. And I can show you why. Because Reese says high EV just means people are expecting it to move, which isn't a bad thing. Yeah, so Reese, that angle is correct. One guiding feature on it, though, is that when IV is high, that means that you are absolutely paying more for it. So then if IV does contract, it can impact your position. It means that you have to be directionally correct. You're weighting being directionally correct more so. Big A says, yeah, I thought if you waited, the volatility would contract, so I guess I'm wrong. No, that's not wrong. If you wait, the volatility likely would contract. But at least from the lens that I was talking about buying potentially for the example of buying options here, is that just wouldn't be like a major input into the decision is all. But the assumption of if you hold off, volatility would probably calm down a little bit. I actually think that that's completely fine. That's correct. But volatility, it doesn't matter that much, and I'll show you why for two reasons. The first one is if you look in the near-term volatility for NVIDIA right now, it's at 112%. For a lot of the conversations that we would have here in terms of buying volatility, most people, at least understand my approach to buying premium, which would have us go out at the very least 60 days. So that would put us in the 17 April at the earliest. What do you notice about the 17 April vol compared to this near-term vol? The 17 April vol is 62%. It's already much lower than all this front vol. It's because it's further out in time. So even though Vega can have a decent impact here, because you're going further out in time and because as of right now, it looks like more of a near-term move, the volatility here still, to be very clear, would be impacted, but it's not as much as this front vol. So to your broader point, if NVIDIA, let's just say NVIDIA started trending sideways, you'll notice that these two vols, well, three vols, specifically expirations, would probably contract a lot. You won't see this one contract as much. You'll still see it contract, but not as much. And you can get a sense of what nominal vol typically is, which is about 56%. So if we're looking at these 80s, the nominal vol typically is 56%. This is at 62%. So you can see that you're looking at maybe like a 6% overall change in vol, which if you get the direction correct, that'll overwhelm that change in vol every day of the week. So that's a really good inference that you're seeing. And I hope that looking at that helps connect a couple more dots on making like that kind of decision, because what you're talking about there is correct. But I would consider that level of analysis kind of like late stage beginner analysis, because you're taught that if volatility or if stock price starts to flatten out, that volatility will contract, which is not wrong. But to take that thought process one step further, we want to think more so about the volatility surface and nominal volatility relative to terms. That's the next step. So hopefully that helps you with that process a little bit. But yeah, no, you're looking at the exact right stuff. That's completely okay. Sweet. All right, gang, that's it for me. If you need anything, hit me up in the Discord. Pro live stream tomorrow at 1700 Pacific time. Be an outlier. See y'all later.